So you're a government employee and you're not exactly sure which route is going to be the most tax efficient when it comes to your bonus. On the one end, you could opt to have that bonus paid to you as a lump sum. So the entire amount is a lump sum. And on the other end, you could choose to take that entire amount, divide it by 12 months and have it paid to you on a monthly basis. The question is, on which side is the grass greener? On which side are you going to be paying less in tax? You're not exactly sure for it. Well, this video is going to give you the absolute clarity on which route is going to be best for you. And by the end of it, you're going to have a better understanding as to how SARS works, just the basics, enough for you to go and make the right choice. Now, as a structure or pre-frame to this, I want you to understand how SARS works when it comes to your taxes. And the best way for us to do this is have a quick look at the tax guide. Now, I want to let you know the video is going to be extremely basic. I'm going to use examples to give you a better understanding of what we're doing. And I just want you to get the framework correct, have a basic understanding. Once you have the basic understanding, you can then apply your set of circumstances to it. So we're looking at the tax guide for 2022. And what I want you to do is when you're doing your calculation, work with the tax guide for that particular year. But it doesn't matter what year you're working with, you can see the trend. SARS, when it comes to individual tax rates or most tax rates, we're always ending up paying more each year. I'm sure you can see that. So the pattern here is, notice the higher income you are earning, the more tax you are paying. So observe, if your income is between R1 to 226,000, it's 18%. The moment you start to earn more, your tax rate becomes more. So the more tax you earn, the more income you earn, the more tax that you're going to pay. So I want you to keep that in mind. The next thing I want you to keep in mind is the tax cycle. So we're going to head over to the iPad and we're going to have a look at what does the tax cycle work, because these are the two things that I want you to bear in mind in order for us to be able to move forward better. So the tax cycle runs over tax period from March of a particular year up to Feb of a particular year, of the following year. So this is a 12-month period. So that's a 12-month period. And then somewhere around here, July or so, this is when you probably do your tax returns. Right? So this is when SARS sort of collects everything together and they assess to see whether you paid in too much or too little in tax. And that happens in July, up to around about November. But notice they're working for this period. So it's from March of the previous year to Feb of that year, and then you're doing your tax returns around about July. So keep that in mind. Now, why is this important? When you are doing your bonus as a lump sum, it's likely to fall inside of this tax year. So let's go use an example. I'm going to assume that, again, I'm going to use basic calculations just to make the math look easy. You're going to do the calculations based on your figures. So I'm going to make an example that your salary is $25,000 a month. And over a 12-month period, that comes to $300,000. So you earn $300,000 for that particular tax period. Then I'm also using an example to say the bonus that you received is another month's salary of $25,000, which means the total income that you had earned for that year becomes $300,000 plus $25,000. Now, I've spoken about this in previous videos, but quick recap. Remember, this might not be your only sources of income. So when SARS is determining your total income, they are taking into account the salary that you earn, they're taking into account the bonus, they're taking into account fringe benefits that you're getting, like what's getting paid for your medical aid, housing subsidy, all of those things form part of your taxes, as well as interest that you're earning in the bank, growth on certain types of investments like unit trusts, rental income that you are collecting. So SARS is looking at all of your income sources. They're pooling all of it together and then they're taxing you accordingly. And my example, again, I'm keeping this very basic. I'm saying that you earn $300,000 plus the $25,000, which means for the year, you've earned $325,000. And when SARS is doing the your taxes, so at the end of this tax period here, July, when they are determining your taxes, They're looking at what had transpired inside of this period. And in our example, you can see is 325. So now we can head back over onto the tax guide. So let's get that. Back on the tax guide, I want you to see where does the 325,000 fit in? Now, in this example, 325,000 falls in here, which means your effective rate of tax is 26%. That's what's going to be the tax rate that you want to work with, 26%. Now, this is if we had done this on a lump sum. So if you said you want to take this on, the entire amount paid to you. Now, what's some of the deterrents? What's sort of making you feel apprehensive about doing this? It could be that from a tax perspective, you're seeing during your birthday month or your bonus month, you're noticing that your tax it's just too high. So much of money is getting lost. And that's probably what's making you feel uncomfortable. If you're paying so much in tax, then how much are you actually getting as a bonus then? Is this thing really a bonus, or is it a bonus for you, or is it a bonus for sales? So that's probably what's running through your mind here. See, the tax is too high. And now you want to look at ways in which you could shift this or get this to be a little less in tax. Now, one of those ways is you could opt to have this bonus paid to you on a monthly basis. So it's divided over a 12-month period. So let's go and take a look at that. And this is you deciding that you're going to be taking your bonus, so the 25,000, and you're dividing it by 12 months. And that's around about 2,000 Rand a month. So now that 2,000 Rand is what's being added to your salary and then being taxed accordingly. So notice what happens now. From a tax perspective, if in a month you had earned 25,000 plus another 25,000, your bonus, your income then became 50,000, and that's why more tax got paid over to SARS. But if you are going to be doing 25,000 plus 12,000, then your income's just 27,000 a month, and then that naturally means that you're going to end up paying less tax. All good? Well, what if it's not? And the reason for this is, I want you to go back and analyze that tax scale that we spoke of here. So remember, tax is run over a period from March to February. I don't exactly know when your birthday is falling, so I'm going to use an example here. I'll make an example that your birthday month is August. So what's taking place is, if you are doing this as a lump sum, so if you are having the entire amount paid inside that one period, then your taxes fall inside this particular tax year. See, it all falls inside that tax year, and then the taxes would work accordingly. Now, this is the secret, so I want you to pay very careful attention. It all falls inside this year. If you are going to split this up on a monthly basis, so what's happening is we have to do another tax cycle here. So I'll do another year. So this is March to February. That's your line. And then let's also remember your birthday is still going to be in August. And what's happening is, if you're doing it monthly, some of this bonus is getting paid inside this period, and then it's stopping now. See, in February, SARS is looking at how much you earn for that tax year. They're taxing you in July. The balance of that money is then shifted forward into the next tax year. So you start a new tax year in March, and then that's when this is coming in. But what takes place? In the new tax year, what if your income is increased? Most likely it would. So if you are earning a higher income, what if you completed some studies, so now you're moving up a notch? What if you get a promotion? So what's happening in that period is you're now putting yourself in a position where you're earning more income, which is great, but earning the extra income could mean that you're jumping up a tax bracket, you see? And this monthly income that's falling in here would then be added onto that total earnings. And this is where you could actually end up paying more in tax, but you just can't see it. You're throwing away more money to SARS, but because it's in small chunks, you can't actually see that that's what you're doing. See? So coming back to the example, if we have to say that we use an example, in this period, I said your salary was 25,000, but let's say that you ended up getting a salary increase, and the salary had increased now to let's use this color, let's use it up. So we'll say that your salary is now increased to 30,000. Just using an example. Now 30,000 over a 12-month period, this is going to be 360,000. So what's happened is you're now earning a higher income, which means your tax is going to be higher. But in addition to that, they're going to start adding the previous year's 2,000 rands. See, because it's falling into the tax cycle. When they keep adding that, this is how you've jumped up a tax bracket, and you're ending up paying more tax on this bonus from the previous year than what you should have paid. See, because you've moved up a tax bracket. And sometimes it's not necessarily you. Sometimes it's not that you had earning more or you've had this big financial change. Sometimes it's SARS. So every year they are adjusting the tax tables. And when they adjust the tax tables, we usually end up paying more in tax. See? So sometimes it's just them doing it, not something that's in your control where you're wanting to earn extra income. Let's go back in on the tax table so that I can wrap this up for you. So when we're having a look at the tax table, I want you to notice the 360,000 I showed you just now. Where does that fall in? We said the 25,000 Rand income falls inside this scale. But 360,000, you've now jumped up a tax bracket. You're now falling inside this scale. So what's happening is you're now paying 31% of tax, where the previous year you were paying 26% of tax. Bringing it back to your bonus, it means the bonus was taxed in the previous year at 26%, but because you've taken it monthly and you've moved up a tax bracket, the same bonus is now being taxed at 31%. I'm going to say that again, but I'm going to quickly go on the iPad to guide you along this, right? So what are we saying? Just a quick recap. If everything is put into 1 month, then you're going to pay tax according to that particular tax year. It's all inside that tax year. If it's going to be split and paid on a monthly basis, then it's going to be spread in this way. Some of that money could then fall into a new tax year. If it falls into a new tax year and you are earning more, or SARS adjust the tax scales, or you get a property and you're earning rental income, or an investment does well, or bank interest, whatever your circumstances are, but you're earning more income could mean that you move up a tax bracket. If you're moving up a tax bracket, and like I showed you, we jump from 26% to 31%, you're going to find this happening. In this period here, because you're in the old tax system, you're paying a lower tax. And in this period here, because you now have jumped up a tax bracket, you're ending up paying more tax on your old bonus. You follow? Which means you're giving away more money. Now, why is this a problem? You can't actually see the problem, because when you start to pay, I'll use a quick example. On this side here, if your total tax worked out to 5,000, it's a big hit. You're getting to see 5,000 coming away straight away. You get to see that. But on this side, if they're taxing you 300 Rand a month, so you're paying 300 Rand a month of that, you can't see that this works out to more. See? Apologies, using the wrong example there. So in this example here, if your tax is going to work out to 5,000, let's say the tax here works out to more than 5,000, but let's use an example of 500 Rand a month. So if it's 500 Rand a month and it's running over a 12-month period, you're ending up paying 6,000. Now, 6,000 Rand is more than 5,000. But the only reason that you can't see it is because in this side, you're just seeing 500 Rand being taken away. Whereas on this side, you're seeing a hit of 5,000 taken away. So I hope this makes sense. Again, I know it's a bit tricky and confusing. So watch the video again so you can understand it and get your math to be correct. Also then start to apply your personal set of circumstances so that you can see how to transition this. And then I want to say to you, if you are aiming at resignation, in this video, you can see we haven't really done anything, but I've done the tax planning in advance to show you what you can do in order to save on tax. So if you're aiming at resigning and you want to be in a position where you can pay the least amount of tax, then contact me to join one of my masterclasses or reach out to me so that we can start doing the tax planning early. If you can do your tax planning early, there's no need for you to waste a lot of your money into tax. So reach out to me and then I can offer you some guidance. As always, if you found the video helpful, I want you to click a thumbs up, but I want you to do something different today. If you found the video helpful, I want you to perform an act of kindness. Pass the video along to a colleague because they might be going through the same set of circumstances and they need this guidance. So that's my challenge to you. And also remember to post a comment because I'm eager to find out from you. Which route are you going to be taking? Will you be taking the tax on a monthly perspective? Your bonus, will you be getting this paid monthly or will you be getting paid on an annual perspective? So comment below and let me know.